Alright, what's up guys? Quick update here as far as things on my end. It's December 2nd, and I'll try to make this a quick video. I'm tired and I got a dog who needs some attention. So here's my current thoughts on the market. If I am dead wrong, then I'll be the first one to jump back on the mic here and upload a video saying, hey, I was dead wrong, and it's time to change a game plan. But as of right now, you got some volatility here in the market, you got some selling pressure. I'm going to look at this as nothing more than a dip to the weekly 21 EMA, which in an uptrend is typically going to be one of your better buying opportunities. Now again, I'll change my opinion here if we blow through the weekly 21, but as we currently sit, you get a beautiful weekly trend here. You're up here at 3/8 AR, you grind back to the 21. There's a weekly squeeze, there's stacked EMAs. It still has a good bullish structure here. In terms of the QQQ on the weekly chart, this one holds up even better. Currently trading above the 8 EMA, so structurally from a bigger picture perspective, ain't nothing changed here just yet. Doesn't mean nothing changes, but as of right now, nothing has changed as far as the structure of the trend goes. Just keep in mind, as you get that dip from, when your weekly chart's up here at 3/8 AR, though that dip to the weekly 21 EMA is normal and healthy and I think presents a good buying opportunity, for your weekly chart to go from plus 3/8 AR down to the 21, your daily chart and pretty much every time frame under it, they're going to get tossed around a little bit. So as we sit here every day actively trading, and we're living through the selling pressure, we're living through the volatility, definitely pretty easy to, kind of flip towards a bearish mentality, which this year has proven difficult because you get that selling pressure, and up to this point, all we're doing is pulling back to major weekly support. One of the best places you can get long, one of the absolute worst places you can get short. So that's my current thought process here. I'll show you a few spots I think are interesting, but I do want to kind of, just stress the importance, I think, of definitely being patient. So like in my mastery right now, we've got open positions in Amazon, Netflix, and Tesla. Now I want more exposure here. I want to add to Amazon. I want to add to Tesla. I'm trying to get these good people into, some NVIDIA, maybe some AMD. So we do want to add more exposure here. However, we're not out of the woods just yet as far as volatility goes. VIX can crack through 25, and you're trading back here towards, the safe zone, back towards your daily 21 EMA. At that point, volatility pretty much throws in the towel, and then I think the market just rips back towards the highs. That's just my opinion. Realistically, though, volatility keeps hanging out up here at plus 2 to plus 3/8 AR. Selling pressure might not be done yet. So as long as we're up here at these extensions, we could wake up tomorrow, market's gapping down 1%. You shouldn't be that surprised. So, though we do continue to hold bullish structure on that weekly trend, volatility is still lingering here. So I am waiting for VIX to die down a bit more here before I try to get, too aggressive as far as adding new exposure. But then from another perspective, 2 weeks from now, the QQQ and the S&P are back here at brand new all-time highs. Well, the current positions we have in the mastery, and the options room, but the current positions we have, your QQQ rips to a brand new all-time high. Tesla and Amazon probably doing very much the same thing. Netflix a little bit sloppy here. That probably recovers really well. So in other words, when you take good entries, you give yourself the flexibility to be a little bit patient, as far as putting on new exposure, when mama market gets a little bit frisky. So let's see. Yesterday we took profits in Apple, and I'll do a video recap on this trade over the weekend. Pretty textbook stuff here. So our target on the swing was about 170, which lines up with 3/8 AR on the weekly chart. Just your textbook triple squeeze. Weekly squeeze, nested inside of the weekly squeeze is your 3-day, and inside the 3-day is your daily squeeze here to 21 EMA. So November 9th, we're selling some put credit spreads, and we're taking profits yesterday morning. So I'll recap that trade over the weekend. I think a lot of basic but really important fundamentals that led to a pretty good trade there. On my end, it was about $6,000. So we took Apple off yesterday. And you open up this morning, you're back at the 21 EMA. So in hindsight, would have loved to have grabbed more Apple here this morning. You're up here at 2/8 AR, so pretty damn good bounce. We're taking profits here, and the weekly squeeze still hasn't fired. So volatility dies down, your QQQ's ripping back towards highs. I think you got plenty more gas left in the tank here for Apple, so I want me a little bit mo. We still have our positions here in Amazon. Weekly squeeze continues to look pretty solid here. VIX dies down, QQQ rallies. I think the weekly squeeze has a potential to take big ZON here into 39.50, 4,000. Seems like a big move, but it was the same exact target for that Apple trade. Get long at the 21 EMA, you're looking for a push into 2 to 3 ATR. So Amazon holds good weekly structure here, and then for Tesla, still setting up in a good-looking daily squeeze. You have green 10x bars on your monthly, your weekly, your 3-day, and your daily time frame. So we have a good trend, we have a good structure with a squeeze at the 21, but you got your MOMO, all right? People, you got your momentum here with all those green 10x bars. So, again, if volatility dies down and if the market rallies back towards the highs, I think Tesla here is gearing up for 1250, 1300. And you should notice I'm basically using the same targets for every trade. 2 to 3 ATR, just about. So we got our swing positions there. Do want some more exposure. And the only one being a little bit finicky here is Netflix. So we sold a couple put credit spreads back here in the daily squeeze. Looked like it was ready for a breakout. Gotten a little bit sloppy sense here. So, the line in the sand at this point for Netflix, I think, very much like your S&P 500, is your weekly 21 EMA. Now, in terms of, the context of a good-looking trend, you build up energy at the 21, squeeze fires taking you into 2 to 3 ATR. You had a big move here in Netflix. But then once you lose a little bit of momentum, you pull back to the 21 EMA. Now, if Netflix is as bullish as I think it is, this is where you should find support. So we're looking for some support here before we manage that trade. But that's what we're currently rocking with. And my number one spot I'd like to add a bit more exposure to, aside from Tesla and Amazon, is the semiconductors. I mean, this looks freaking solid. Big push off the daily 21, reversion to the mean. You're printing a brand new daily squeeze, monthly, weekly, 3-day, daily, green 10x bars. So you got the big trifecta here: trend, structure, and momentum. And I think as a swing trader, you want to live and die by trend, structure, momentum. So if VIX dies down, if the indexes rally back to new highs, the semiconductors, I think, should be leading the way here along with QQQ. So you could trade the SMH potentially. You could look at NVIDIA here. And John, I think, sent out a trade alert today in the options room. So I might be joining him here shortly. Trend, structure, momentum. Big time push. Reversion to the mean. Print a brand new daily squeeze. Monthly, weekly, 3-day, daily green 10x bars. AMD is very much the same thing here. So those are a few spots, my friends, I'm going to continue to focus on. And we sat through this, I think, a handful of times this year. So, again, I just want to stress, market rolls over from here, I'm going to change my current game plan. However, we've seen this movie, how many times now? And granted, I can promise you this, the day is 100% going to come where the market pulls back at the 21 EMA and we keep pulling back. And at that point, you kind of got a shift of trend, right? But until that happens, I think you try to control those emotions. It's just, again, we'll see where we go from here, but you look at this weekly chart, it's bullish. It's got momentum, it's got structure. Folks just tend to get a little bit antsy here on that clean pullback to the 21 EMA. So structurally, everything continues to check out. I think with volatility still elevated, if the move back to the all-time highs, is going to unfold, it might not unfold right away. We could have a little bit more downside. We could have some consolidation here. But that's a current thought process, y'all. And the fun part for you is to get to stay tuned and see how it all works on my end here. But I hope you had a good week. Wanted to touch bases real quick with a quick update. I appreciate you being a subscriber. If you haven't already, go on ahead and definitely check us out here. It's simplertrading.com. You can check out my mastery. Doing about 2 or so live trading sessions per week there at the mastery group. But that's all I got for you for now. Enjoy the rest of your night, and I'll talk to you over the weekend.